Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be exploring the Eurozone GDP, and helping me today is Senior Investment Analyst Rafi Boyajian. I'm Christina Marujos. Rafi, we saw a huge turning point for the Eurozone when EU leaders finally agreed on a virus rescue fund last week, and the sentiment has been positive ever since. Now, even though markets are anticipating a V-shaped recovery in the Eurozone, European and Eurozone GDP data out on Thursday and Friday might come in weaker than expected. Should this worry investors, and what will this tell us about the recovery of the EU's economy?
Well, Christina, there can be no doubt that the GDP numbers will be pretty bad. Of course, it's no secret that there was a strict lockdown across most of Europe, so that would definitely have taken a toll on the GDP output. So we are expecting the euro area economy to have contracted by as much as 12% over the period. So what might be interesting, though, is the disparity between EU member states, particularly between Germany and Southern European states, and even France, because Germany, France, and Italy will be publishing their GDP numbers on Thursday and Friday as well. We're expecting German GDP to come in at 9%, a 9% drop, and that compares with about 15% drop in both France and Italy. So that will probably reinforce the fact that most of the virus stimulus package will probably go to the poorer states, and so that data will probably help those poorer states get more funds, which they badly need. But as far as the overall picture is concerned, there is reason to be optimistic about the future, and most of the worst of the virus impact has already been priced in. So even if we were to see worse than expected growth figures, it's unlikely to make much of an impact in the markets.
Turning to the single currency, we've seen a stronger euro lately, boosted, of course, by the agreed virus rescue fund, and it's especially strong against the US dollar. Could weaker GDP data dent the euro's impressive rally?
Well, that's pretty unlikely. So even if the euro does fall back a little bit on any disappointing numbers, that will probably more likely be down to profit taking given the recent strong gains, because the positive outlook for the euro area will really not be impacted much by these GDP numbers, because the more up-to-date data that we've had on the PMIs, for example, they're so far pointing to a V-shaped recovery. So as far as the outlook is concerned, it's looking pretty good, especially in comparison to countries such as the US, which is facing a second wave of infections, and the recovery there is under threat. Whereas in Europe, although there is some risk of a second wave, so far the lockdowns are going according to plan, and so it's looking more and more likely that Europe should enjoy a decent recovery.
Rafi, thank you so much for joining me today, and thank you for watching this Forex Preview here at xm.com.